The markets are setting up for something huge, and we need to talk about it. I am Dr. Stock, Doctor of Education. And do you know what sprinters eat before they run? Nothing, because they fast. All right, as usual, we're going to take a look at SPY, QQQ, see what's shaping up there, and then we also have some big tech that's out there. I want to actually cover ARM real quick, Google, Apple, Nvidia, and an update on Tesla. So let's go ahead and check it out. So right here is SPY as we're looking at it, and it is currently threatening to put in another all-time high from what we had. So the last all-time high came in on March the 8th. So just a few days ago, so tomorrow will make 1 week. So we're just 1 day shy of that. So we peaked out at 518.22. And then since then, we got and closed 517.38, 517.29. So we're within about $1 of that. We're creeping up on that 518 in the pre-market here. Putting in that new higher high is a good thing. Keep us in this rising wedge a little while longer. Like I said in a lot of my previous videos, since December, January, cautiously bullish on the markets as we continue through here. So looking at QQQ, we've actually left the original rising wedge pattern, and actually it helps if we look at the hourly breakdown for this one to see what's going on. This is one of the huge things that I think is happening in the markets right now. We have a consolidation pattern happening on QQQ. Will this be that catalyzing moment where we break through the top of this trend line that we have right here and that we start to retest the resistance that we have with this trend line from the rising wedge pattern? That's going to be the big question for the day. And breaking over this yellow line that we have here will break that double peak that we had before. And so this is one, that line, that rejection that we could possibly get there could send us back down, maybe keep us trading sideways for a little bit longer. Should we break that, then we can take on the previous all-time high that we had in the Qs, which happened at 448.64. Or if we go to it on a daily basis to see where that high price was, let's zoom in on this and we can see a little bit better. There we go. And it does happen to be 448.64. So that was during the regular trading hours that happened before we had a significant sell-off from there. And like I said, the hourly chart just gives us a beautiful look, a beautiful breakdown at that consolidation pattern, that symmetric triangle that we have. If we break down through the bottom of this trend line instead, we do have some supports on the way down, and we could possibly see lows come in as low as, we'll see if we break 440. If we do, we have room down all the way to 433. So that would be significantly down from where it's at right now. So watch this symmetric triangle pattern. See where we go today to see when we open, if we drop and come off of this trend line as resistance. And then we'll see where we retest support. Or if we break that resistance right at open, you can see that we have some room to dance around in here before breaking higher. So be on the lookout for that one. Moving on to ARM. ARM, we have another symmetric, there we go, triangle pattern that's happening right here, and we'll see which way we break out of this thing. I said that right through the midline of this is about 132, 133, and you can see yesterday that we danced right around in there, bounced off support, and then we found that in the pre-market hours, we're actually finding that as resistance right now. So if we fail to break that, we could retest this lower trend line support. We could possibly see a sell coming off of ARM, so be on the lookout for that. If we break through that, we have a chance to rise up to about 140 coming up off of what we have for this top trend line resist that we have right here. Moving on to Google. Google, actually yesterday, they broke through this trend line that we had moving down here. I said we'd have room further to the upside. Got to watch out for the 50 EMA and SMA. And it turns out that that was the right call, because yesterday, even though we peekabooed above this red 50 EMA, it is one that we came back down and we found resistance. We ended up closing down below it. Today in the pre-market hours, looks like we might actually open up above that, and then the 50 SMA is the next thing we want to look for at 143.33 is where that's at right now. So we want to be on the lookout for that. Breaking above that is bullish, and we had a significant sell coming from Google, and we'll see if we get that recovery coming out of it. If we just take one quick second to put up the Bollinger Bands on this, we can see what exactly that looks like as well. So, yes, there we go. Top down to bottom of this thing. So far as we're retracing, we retraced 23. We're moving up. We actually closed right at the 38.2. And then it looks like the 50 is also, wow, the 50 on the fib. We could see that 143 to 144 show up today. We'll see if we get that rejection. If we do cross, we have room up to about 146. So be on the lookout for that for Google. There could be some further upside as well. Moving over to Apple, we see a consolidation pattern here as well. So this is the top trend line from more recently, and then this one that we see right here that we keep on hitting up against that one, that's forming that top resistance that we have. We could possibly push through that today, and that could give us room up to the mid 170s for Apple. If we break down through the bottom of this, that gives us room down to 170, down to as low as 165. So be on the lookout for that one for Apple. Now, Nvidia and Tesla. So for Nvidia, still consolidating. Look at this in the pre-market here, which this is a low volume trading time. I wouldn't make too much of it right now, but it is something worthwhile to pay attention to, that we are currently breaking down below this support that we have here. Does that give us room back down to 850? We're going to have to watch for it. That could definitely influence what we see happening in the NASDAQ 100, especially where QQQ is involved in that as it tracks the NASDAQ 100. So be on the lookout. It's possible that we get that bounce. We do want to see that the low that we get does stay higher if we're going to continue back up. And then we also want to be looking for a higher high to come out of this. We could continue to consolidate, and that would even put further pressure on for Nvidia. I want to keep reminding you of the GTC conference that we have. We could sell leading up to it. Maybe we're already seeing some of that sell. The news coming up being that this is the week before, and that high amount of anticipation, people locking in those profits early to make sure they don't get burned on that. Now, mind you, it is also something that we could possibly sell even further leading into that, so that the GTC keynote, the conference starts on Sunday, but the keynote doesn't happen to Monday until 4. So we're going to be on the lookout for that, for those catalysts coming up, that if we sell off leading into that keynote, we could possibly see that as a positive catalyst going up. If we rise up leading into that keynote, we could possibly sell off in a sell the news kind of event, but still with the opportunity for catalysts to follow. So it's going to be a wild ride and a wonderful time to watch for Nvidia stock. I'm overall bullish on Nvidia at these prices that we have right now, given the market's current condition. I think that we're going to see possibly 4 digits sometime this year, but we could also stay in the 3-digit territory for a little while longer for Nvidia stock. So it is going to trade with the market multiples being the lead AI infrastructure play. It's one that I don't think, if it does happen to soften, I don't think it's going to stay down for very long. That when the market returns to strength and the trading multiples increase, that the Nvidia stock will also have its multiples increase and the price will also go along with it. So this one, I think there's still upside left from where there's at right now. It would be nice to see it significantly de-risked right now to create more buying opportunities with even further upside than what we're currently getting out of Nvidia. But watch this consolidation pattern, that maybe if we break through the top of this, that we can retest the all-time high coming in at about 975, just about there. If we break down through the bottom, we will be looking for 850 for some pretty firm support coming out of that. Moving over to Tesla, we actually have a trend line right here, which we landed on yesterday, and we do have a big bearish flag pattern that could send us down further. We have a smaller bearish flag pattern, which I did short this yesterday at about 169, 170, right around in there is where that short put option play came into being. So we'll see that. We also have support coming down at about 166. So we want to be watching for that support. I'm going to keeping my stock played tight on this one because I don't want it to reverse on me and to put me into a losing position. But this is one that I'm looking for and being aggressive on. So the thing is about being aggressive, big risk and big reward. They're buddies. They go together. If you want low risk, that also goes with low reward. So there's always a balance to that. I went a slightly big risk on this one, actually significantly big risk, but not as much as I could have. If I was being super aggressive, I would have gone to even a week closer, but I did play a short-term option on this because I think we could get a possible short-term drawdown even from where we're at right now. But we do want to be watching for this support that we have that I didn't buy into support, because it is something that could reverse significantly as soon as it does find wherever that bottom is. I think there's going to be a significant rise in Tesla price whenever that bottom does happen to occur. Maybe it's now, maybe it's not now. We're going to have to be watching for it. So let me wrap this thing up for you guys. I remain cautiously bullish on the markets. Google could continue to the upside a little while longer. ARM right now needs to break over 133 solidly in order to have further upside. Then we have room up to 140. Be watching the trend lines, because if we break outside those trend lines, that could lead to further buying or selling of ARM prices, of those ARM shares that we have. Don't forget the lockout period has expired, and we don't know if SoftBank is going to be cashing in on some of their shares given the significant upside it's experienced. And then we have Apple. Apple could continue rising in that consolidation pattern, so we got to watch the trend lines on that one too. Nvidia, once again, consolidating. Watch the trend lines. It's going to signal which direction we could go in with an Nvidia's case, and especially if it's in confluence with Apple. Both of them dropping down through could influence the market to the downside pretty significantly. If they both break to the upside, that could again influence the market pretty significantly. The market, I think, is going to go right along with those as they are heavy hitters by their market cap. And then Tesla stock, maybe it found support, maybe it didn't. We're going to have to find out. Like I said, I'm keeping that play that I have on Tesla, which I actually did dollar cost average as well for Tesla, Apple, and Enphase yesterday. But for Tesla, we'll have to see where that bottom happens to come in. Like I said, maybe it's now, maybe it's soon, maybe we've got to wait a little while longer for that to happen. But when we do find it, again, significant upside is most likely waiting for us on the other side of wherever that sell happens to finish. If you guys want to see what I'm buying and selling, check out the link for the Patreon down in the description. If you want to do technical analysis like I do, also check out that link down in the description as well. As always, guys, thanks for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.